Hey, what's going on, everyone? I wanted to take the time today here at Millennial Investments to go over all of the trade alerts we have open. We currently have about 82 or 84 trades open, and it's been pretty busy around here. So I wanted to take the time to go ahead and look over them real quick and basically, review their current status and what to expect with them going forward. Get some of our top performers out of the way, where our current positions are and where we plan to go moving forward with them. This is going to currently be called our Open Trade Review Status Update. And we will basically be going down this entire list of stocks that we have alerted on here since about the end of November up until today, present day trading, which it's currently the 17th. So I want to give some updates on what we're expecting with the stocks moving forward and allowing our members that are a part of the investment community at Millennial Investments to have a visual outlook versus us just pushing out our text trades. Although we do individual reviews on each of these. But for right now, I'm just going to go down the list here and start with the oldest stocks, actually. And to begin, it is FCell. FCell broke out. Our initial alert on the stock was back on December 22nd when the stock, or no, that's SNDL. Let me see if I can sort this by date, or I can at least do it by this. I can search actually. Anyways, moving forward, we alerted on FCell back in November 25th when the stock was still at 851. I'm not going to go too far into the details. The stock is currently sitting at 22.38 and providing a 181% return on the trade. As of right now, the entire EV market is experiencing a pullback. I'm not necessarily saying pull our position out of the trade because we are so deep in the money on the position we have. Maybe scalping profits here again to secure them while we see this pullback back to potentially the 2094 before we see a return in the EV market. I'm basing that off of the trend line from Tesla being the market leader in the EV space. It's currently down from, I believe, let me look here. I got it pulled up. I actually have some calls on the trade. We peaked out on Tesla at the 881 levels here of resistance, and it's currently trading down $100. So I believe that it's bringing the EV market down with it, which is why we're seeing a pullback in things like FCell. BLNK is a stock we've been discussing on our coffee and stock session. RMO is another trade alert that we will review later on. But currently, FCell is showing signs of a pullback at least to the 2094 level of resistance that was previously set here on the 13th. Let's see if we find support here. If you want to scalp your profits, just to lock in a little bit more security from the initial profits that we gained off of our initial trade alert, that wouldn't be a bad idea here. Of course, if you conducted the split and run where you cut half your position in FCell to allow your current position to be free, basically, and continue gaining profits, that would have been at around the $16 level here, seeing that we alerted on the stock when it was around $8. But keep an eye on FCell. We're not saying that it's a sell right now, which is why we haven't alerted on that. We are suggesting to scalp profits and look for a potential re-entry if you do want to add more for a longer term investment. Unfortunately, on the 4-hour, we're seeing signs of a strong pullback that could actually go a little bit lower than 2094. And the 1 hour will solidify that as you see these gap downs. But as I said before, we found strong support here on the 2094. So I find confidence that we would at least bounce off of that moving forward. Tesla is currently moving lower as well, currently trading at 775 and having issues trading above the 780. That would be a signal. If Tesla is able to find support above the 780, then we will continue moving higher from there. But right now we're seeing intraday issues with that becoming a new level of resistance for the stock. And we expect that to weigh down the EV market overall. Our next stock, one of our oldest stocks that we have open, is AIKI. The stock has actually been performing very well. We alerted on the stock on November 30th when it was at 57 cents. Current market price is of 1.7. Once again, not going to go too far into details on the trade, but I am going to review the stock chart. As you can see, we actually popped up to the 260. I could do some quick math real quick on the side here while we're discussing it to get a full overview of how the stock performed. Since our original trade alert, let me 261, I believe it was its high. We alerted on it at 57 cents. That was a difference of, let's see, B1 and then 57, and then divide that by this. So it actually provided us with a 357% return on the trade, which we updated at those times. We were keeping a hold on this with the position being so deep once again in the money. And as you see, we're seeing a large selling spike on the 1 hour time frame, and seeing a pullback to those 162 levels. We broke through some levels of support, the 214 and 175, I would like to point out. And I'm looking forward to find continued support right here at the 135 before moving on to retest those 175s. If you pull your position out here, I wouldn't blame you because the stock is currently down almost a full $1 from our peak. I would hope that it would reverse off of the 135s, retest the 175 levels, and then continue trading in that 175 to 214 price range. If you want to look at it from a Fibonacci chart, it's not an issue. We can currently do that real quick so you can kind of see the levels from that standpoint. We're going to do it here. We're currently working to the 50-cent levels, which is right under our 162 support line that we identified earlier. It's at 152 on our 50% retracement. I'm sorry. Let me clear that up real quick. Let's see if we find support there above the 152 and bounce based on the fib retracement chart. Even if you were to readjust this to maybe right here, it still identifies it as the 155, which the stock actually dropped to and bounced off of before moving higher. Let's see a little more in depth. Yeah, 155 we bounced off of, but it's still showing signs of a downtrend, although selling volume is slowing down and buying volume is slowing down respectfully as well. So be careful that we don't break below that. If we do, then we're going to those levels I identified before. Our next trade that we're going to look at, one of our older trades, is BBD. BBD hadn't performed so well as let's say FCell and AIKI, but the stock actually, let's see when we alerted on it. We alerted on it on December 4th or 1st when the stock was sitting at 49. It's currently sitting at 464 right now. If we go back and look at that December level, we actually broke out to the 546 levels, and that provided us with a, if you were able to place a position on this. I'm not sure if too many people were actually members of Millennial Investments at that time to catch this trade. This is more so when we were testing our system. If we hit the 546 levels, that would have provided a 12% gain on the trade overall, which hit our 10% minimum. It's currently trading below our close to our 5% suggested sell stop loss, excuse me. So we will be watching it to close it. I don't see too much momentum going into the trade as of right now. We are finding strong support at the 443, so this has come down a lot more than where it's currently at. It's currently showing signs, so I'm expecting to actually close this stock here today. I'm going to add it to our potential closing list, just so we can keep an update on that and make sure we're updating everybody properly. I'll go into more thorough details later on with this trade. Right now, eCore would be our next stop here. eCore did very well for us. One of our 100% gainers at one point, currently still sitting at 87% on the trade. Initially alerted on it at 156. And has pulled back since hitting its high of 330 within this trading session, not the all-time high, but since we initially alerted on the stock was released on December 8th, wherein the stock was still sitting at 156. As you can see here, we bounced up a little, found that support line, and then slowly broke out to the 330 levels. That provided us with a 112% return on the trade initially. At its peak, currently trading at 282, still is providing us with a oh wait, messed that up, sorry. 282 is currently providing us with an 81% trade profit gain on the trade, excuse me. So looking to see if it continues this momentum to the upside to retest those 330s. As you can see, back in July, this was a very defined level of resistance, and that's what we were targeting going into the trade, and fortunately we hit that target. The stock has traded much higher than that before, somewhere near the 502 ranges. If we are able to break the 330, we expect this to potentially retest those let me identify that on the chart just so we can have it saved for the future. 502 ranges. If it does hit that, then we're looking at a potential 222% gain on the trade for those that were able to find a position on this stock when we initially alerted on it back in early December. Our next stock on the list that we're going to review is HCHV. We initially alerted on HCHV back in December 14th, a little bit in the middle of the month. It's currently providing us with a 95% profit gain on the trade. We initially alerted when the stock was at $7.76. I'm sorry, I got my tongue twisted up there, which is currently providing us with a 95% on return on the trade. We go in a little deeper and see where we peaked out at. I think the $15 levels was our max. What we saw here, it actually hit 1601, providing a give me a second. I'm doing this straight from scratch. I don't have anything preset. I wanted to actively look at these trades. That's why I'm doing it this way. So if you could bear with me. Get everything configured right. If we hit 160, then we're looking at a potential 116, excuse me. We're looking at a potential 106 overall again. Let's see if we can identify some levels beyond the $16 level. The next level I would like to point out is this heavy level of resistance here on the 2256, which if we can hit those price levels, we're looking close to a 191% profit gains on the trade moving forward. Just want to check in. It looks like Tesla is currently trying to retest that 780 level I pointed out earlier, so I'm watching that very closely. Sorry. I have some money in the EV plays right now, personally. Moving forward, we're going to go look at MOGO. I released some updates on this trade over the past few weeks due to its high performance. We initially alerted on this stock. Let's see. On December 15th, when the stock was still at 318. Let me start changing my parameters here. The stock is currently sitting at 950, providing still yet a 192% on the trade. We would have definitely recommended a split and run here where you hit 100%, go ahead and cut half of the position to secure your initial investment risk and allowing the profits to continue running, just as this one did. At its peak, it actually hit 1186, providing a 273% return on the trade, which essentially if you did the split and run at that 100% level, you still would have acquired another 173%, allowing the profits to continue making you money while securing that initial investment. And that's why we suggest it. We're trying to build a portfolio that has great stocks in it, but also risk management is a very key factor in how we trade here and how we suggest you trade as well. So that's why we suggest getting rid of half of the position. A lot of people give us flack for that, but that's our goal there. The next stock we're going to look at is LYG. We alerted on LYG back on December 15th when the stock was still sitting at 193. As you can see, it's currently sitting at 214 and only providing us with an 11% gain, which is our minimum, our projected, how would I call that, minimum projected profit gains that we go after on all of our trades. And as you can see, we're sitting right above those levels where we look for 10 to 20% on all of our swing trades. That's our goal. If they break out above that, so be it. If they break below 10%, we sell it. Simple as that. That's how we're managing our portfolios here, which I am working on assisting our premium members with more of a portfolio management style service moving forward, so that they're not exposing themselves just because we release a trade alert every day, but they're allocating their portfolio properly to lower that risk and also still be able to capture these gains that we're seeing. Looking at LYG, its peak has been around these 213 levels. Recently, the levels of resistance we've been trying to retest very strongly was the 209. As you can see, it gapped up above those levels, hit the 217, and has consolidated since. Let's see if we find support on this moving forward to see if we can optimize some of those gains on this trade moving forward. As far as levels are concerned, from a historical point of view, 231 would be the next level that I would go after here. 221. So at its peak, we've already achieved about 15% on the trade. If we wait to the 231, and if we're able to retest those levels, then we're potentially looking at a 20% gain on the trade, which is our top line that we go after every trade alert we release. Give me 1 second. But moving forward, with our next stock is TCON. We released an alert on TCON back on December 15th as well. The stock performed much better than some of our other trades, providing currently at this time a 24% return. A 41% return. I'm speaking what I'm typing at the same time, so excuse me. But let's look at the stock real quick. At its peak, we actually hit the $12 price range, as you can see right here at the end of December. I said that wrong. Let me see. Oh man, it keeps getting in my way here. There we go. At its peak, we hit 12.20. That ultimately provided us with a 48% return. We're currently sitting at 42%, with the price level being at the 1097. Let's see, let me make sure that's right, because it changed. 33%, excuse me, with it sitting at 1097. It must have broke down a little bit while we were talking about it. Let's see how that 1220 relates to historical price action with the stock. It looks like we dipped down below those levels and then bounced right back up, found support, and then it broke down for some reason. I would like to go in and determine why we had such a steep drop here. This is a financial bank, so I would expect there having to be something wrong with like regulation or something at that point. I'd have to look into it further before I speculate on that. Next level, that beyond that 1220, if we can bounce above it and stay above those levels, would actually be around the 1680. If we're able to hit those 1680 levels, then we're looking at a potential 105% return on the trade. And that's only if it has the momentum, which it's currently showing on the daily, to break above those 1220s and then eventually retest those 1690s. We would look for key resistance there, and for the stock to pull back and find support above those 1220s again before moving through and trying to retest them again, as long as the company stays on the path that it's currently on, which has it trading at the levels it's at. So there's a bunch of things you have to consider with future outlook. But I just want to give an update on that as of right now. EYPT was a very wonderful stock for us, a very wonderful position and trade alert that we have provided. As you can see, it's currently up 205%. We initially alerted on the stock back in December 14th or 15th, excuse me, and the stock is currently sitting at 1480, and still providing a 200% return on the trade at its peak. Let's identify that to see where it was at its peak. As you can see, the 1413 was a very key level to break for us here. It reached as much as 1486. And what I want to do is identify where these levels, once again, relate to previous price action. And as you can see, A key level of support that could have become resistance in this trade was at the 1283. We broke well above that. The 1413 plays a very key level in these resistance levels. So moving forward, I'm expecting to find support at those levels and then potentially retest the 21 price levels moving forward, as long as the company continues to perform the way it has been. If it does that, then we're looking at a potential 339% gain on the trade if we're able to find support above the 1413 and continue trading in this price range here. That would be the next key level that I would like to point out. We would also need to break through the 1679 as confirmation in this trade. Moving forward, ASM. We alerted on ASM back in December 18th when the stock was at 94 cents. It's currently sitting at 142, providing a 51% return on the trade. And let's see where it peaked out at. We alerted. Let me bring this down. Make sure that we're in our time frame, because I see this crazy bar here. This was in February 1st. The stock jumped all the way to 340, and I think I did a trade alert update on it with it hitting 334 because it hit 255% return on that trade. I'm not sure if anybody was able to capture it or was even in this trade or had a position here. As you can see, it consolidated very heavily back to the 142 price levels, and we're finding current strength at those levels moving forward to continue moving higher. Excuse me, my daughter's not having a good morning, apparently. Let's see. She's mad at the world. It's cold out here. All right, so based on the current trend level, we could basically bounce to the $2 again. If we do that, you could still gain about 113% on the trade moving forward. ASM, nice returns on those 255s if you were able to capture the gains there. But as of right now, we're still up about 51%, which is 30% above our top line targets. Our next trade we're going to look at is DTIL. And by the way, if we're looking to close one of these trade alerts, we will add it to our potential closing list and then update everybody as we make those decisions moving forward. With DTIL, we alerted on this stock when it was at 8:45 on December 17th. It's currently sitting at 12.54 for a 48% return on the trade. Let's look how it performed over time since then. As you can see, we broke out in January. We alerted on this, so our members were aware of the breakout here. Sorry, Julian commented. Thank you, Julian. I think you're the only one here. I'm really doing this live so that I have all this information here for our users to refer to later. But thank you for joining me and watching. Whoever else is here, thank you again. Initially, DTIL provided a 110% return, which we alerted on back around January 20th or 21st there. And then came down, consolidated, found some strong support at the 1156 levels before bouncing again to the 1581s. It's currently trading back down at those levels that, and I would like to identify this here, is that it seems like as if though this level became, it was previous, if I can get in there, right there. It seems like this 211 level is a very key level to pay attention to with the stock moving forward. If you currently had a position in it or have placed one in it since our trade alert on the stock, key level here to see if we do have that strong newfound support to allow the stock to keep bouncing back up to at least the $16 price levels again. Potential re-entry if you've never been in this stock. But before you get in this stock, make sure that it stays above those 1211s. I don't want to share this information with people thinking that I'm alerting on these stocks again. These are stocks that we alerted on a while back and they performed. I want to make sure everybody understands that. So, but at its peak, we received 110% on the stock, or yeah, at the 1715s, even hitting the 1590 price levels. we received 88%, and we're currently down 12, 11. We're currently down to 43% right now. So performed very well, almost 5 times what we expected on the stock. I can't be mad at that. I don't expect every stock that we alert on to be a 100% gainer. They surprise me when they are. Pretty happy when they do. The next stock we're going to look at is IFMK, which actually did provide us with 100% or more on the trade. As you can see, it's 183%. We initially alerted on this stock back and in December 17th. It's currently sitting at 219, but let's see where it's peaked out at. As you can see, it hit 424 here at its peak on February 11th. That provided us with a 444% return on the trade. You can actually view our can we talk about OEG towards the end? Sure, of course. But as you can see, it peaked out at 424. I believe we alerted on that update. You can view our previous videos to confirm that. It may be before we started doing our videos here to review our trades. It's currently sitting at 216. What we will look for it to potentially do is bounce back here to the 263 levels and potentially bounce back up another close to what is that, 50% more. If we find strong support, I'd look at it at a lower time frame to confirm. Of course, with this stock bouncing so high, you saw the large selling volume come in. We saw people start buying up here, and the buying volume came back in, but sell volume has overall seemed to desist at this time. So the stock still has some movement to the upside. I'm looking forward to it to do so. It has already performed very well for us. Like we said, in this instance of being above 100%, go ahead and cut half of the position to lock in those initial investment, the risk of your initial investment, and if you would have did that at 100%, then you would have looked at still gaining up to 344% on the trade just off your profits, and that's free shares, right? So even being at this point, you're still up 81% on those profits, theoretically, if that's what you did. And that's why we suggest that way you can allocate your initial investment somewhere else. But the stock's doing well. I want to keep watching to see if it's a pull-out position. Make sure it's not a pump and dump and things of that sort going into the next few weeks. It doesn't seem like it, the fact that it did pump so high and then found support much higher than it was. Most pump and dumps end up pumping very high and then dumping out below where it initially started. We got somebody else watching us. We're doing a live trade review over our open trade alerts for all of our members. You can also get to witness some of the trades that we have pushed out here at Millennial Investments. If you're interested, feel free to get a free membership to get a free daily free trade alert here at Millennial Investments. If you want access to all of our trades, it does require a $69 monthly fee, but you can also test that out for 7 days for $10 if you're interested. So let me know. Going on to our next trade though, just so we can fly through these, we have a large portfolio built. So I'm not going to spend too much time on some of these stocks. Dare, we alerted on it on December 18th when it was at 120. Its current market price is at 230, and providing us with a 91% profit on the trade. Although I know the stock has bounced higher since then. As you can see around January 20th, we hit 385. We alerted on that when we hit 221% on the trade. Great trade here. Once again, split and run tactic that we suggested to our users and our members rather. If you did that, you still would have gained another 120% on your initial your profits that you made off the initial investment, that 100%. So that's still great. You would have doubled your money twice in this trade. It's currently finding strong support here moving forward on the, I want to identify this level for us so that we make sure we can know where we don't want to go below moving forward. and that's the 211s. We're currently trading at 221. So if we break below this, then we're going down. If we hit it and bounce off, then we could potentially retest the 301 price levels. And what I'm gonna do over here to the side is kind of calculate for anybody that may be looking for a potential entry into this. You can kind of get your profit margins that you could potentially gain from the stocks that we have traded previously. I'm not suggesting an entry on any of these because we were able to capture most of these so deep in the money that it would be crazy for me to tell you to go in now. But if you're interested in them, that's completely up to you and your own discretion. So if you were to trade this now at the 221 levels or bounced it off of the 211s, you're looking at anywhere from a 36 to 43% swing on the trade. So not a bad re-entry here. Definitely can make some additional gains as long as we find support at those levels. So keep that in mind. Next trade is going to be SNCA. SNCA did very well for us as well. Yet another top performer. Another 100% gainer here. I'd like to identify that. We initially alerted on the stock when it was at 93 cents on December 18th. It's currently sitting at 207, which is providing us with a 121% profit on the initial trade alert. Let's go in and make sure that was not our highest levels. As you can see, it was not. We actually peaked out here at 219. So ultimately, overall, the stock was able to provide a 135% profit gain on the trade. As you can see, we're trading to the higher side of our EMAs. That's right off the 13 EMA. Still showing momentum to the upside. We're looking to break through those 219s. As you can see, we are in a what you call an ascending triangle, and typically what we see occur is that it will try to retest those levels and potentially break down. If we do break down here, let's see if we can find some support on the 195 moving forward, or a potential re-entry even at those levels if the stock were to pull back to then bounce to those 219s. You're not going to get the type of profit gains that we initially received from this trade alert, but you still could be able to capture it from the run at least. And as you can see here, those 186 levels were previous levels of resistance. The furthest previous level of resistance was 160, which is where we actually found strong support before bouncing to the 210. So if we pull back, break below the 186, look forward to hit that 160 for a potential reentry if you're interested in the trade. I'm not suggesting a buy at this time. Once again, we were so deep in the money that it's hard for me to do so. Let's look at our next one, MBIO. This actually was concerning me when we initially alerted on the stock. It's currently up 30% from our initial trade alert on December 18th. Stock was still at 318 when we initially alerted on it. It's currently sitting at 412, providing that 30% profit margin. If we go back in time, though, you can see that the stock actually was trading much higher. As I said, after we alerted on it, it really was bothering me that it wasn't performing to our expectations at the time, but it actually reversed, as you can see. We were seeing a dip there, right? Where was it? There was a strong dip that we had. I think it was right here. I thought it was going to break down on us, but it actually popped out. Let's look at it from the 4 hours so we can kind of identify some of our key levels to pay attention to moving forward with this stock. If you did place a position on the trade based on our trade alert, key level to watch here is right here at the 399, which is currently sitting 1 cent below. Let's see if we find strong support here and bounce back up. And the reason I identify that is because once it broke out, it consolidated but found the momentum to then find support here again. Same here, support. So let's see if we find support here as well to continue moving to the upside. Based on it hitting that 521 level, though, it provided us with a 64%. Is that right? Let me make sure I'm doing this for 318, 521. Yeah. $2, 64% return on the initial trade. We alerted, I believe, on that update to go ahead and capture whatever profits you found, felt comfortable with. Excuse me. Right now, we will be determining whether or not we're going to keep this trade alert open based on whether or not we find support above this. So I'm going to set an alert right here, actually, to kind of give me a heads up. If we hit the 387, then I know it's going down. I'm going to close the stock alert at that time. Let's see, close MBIO and exclamations. Anyways, I will also try to provide current stop losses. If you are looking at these and looking to make a position on the trade, so you know at least where to stop before losing too much money, because the stock's already running and too high at this time. 19 cents, and then that minus the. So right now our stop loss is actually suggested around the 379 price levels. I'm going to go ahead and bring that down to those levels right there, and that's our support level, actually, at least in this time frame. So anyways, moving forward, we're going to go to SSPK. I think CRM was actually a test option alert we did, and I'm not going to focus on it too much. All right, SSPK also doing well, one of our 100% gainers, 124%. Initially alerted on the stock back on December 21st when it was still sitting at 12.30. It's currently sitting at 27.95 for 127% profit on the trade. At its peak, we did peak out at the 29.49 levels. That ultimately provided the overall trade performance a 140% profit gain. As you can see, we're having issues though here at these 28.14 price levels. We're currently 12 cents above that. Let's see if we find strong support. You can look on the lower time frames to identify that. You can see how it bounced up, gapped up above it, and then seemed to retrace below it, but then it's fighting real strong to stay above it. So let's make sure we do moving forward. I'm not going to say that just because it breaks down, it's going to break down hard. As you can see, our next level that we would consider would probably be around the $26 price range, which actually correlates with this old previous level of resistance here. I want to identify. I'm sorry that some of these charts end up having all of these horizontal lines to pay attention to. That's why I kind of color coordinate them based on that. And I'll try to keep up with that moving forward throughout this live review of all our traded alerts. I just wanted to kind of give our members an update on how our trades are performing, if they have positions in any of these and have these stocks in their portfolio, and also give our new followers that are new to the community a preview of how some of our trade alerts have performed since we started doing this at Millennial Investments. But getting back to it, SSPK ultimately provided us with a 140% gain, currently sitting at 127%, looking to find support above the 28.14, which is currently at 28.15, as I was expecting it to have issues staying above, but if it does, then we will continue moving higher to the upside here. So our next stock is going to be TBLT. TBLT was released, I want to say, at the end of December, right? When the stock was still at 85 cents. It's currently sitting at 148 for a total of 74% profits on the trade. But that's not where it peaked out at, and I'm going to identify that here shortly. It peaked out actually at 178, which ultimately provided us with a 109% gain, another 100% gainer here at Millennial Investments yet again. Not expected, not where we're going for, but when it happens, we're very happy that it does, because we're able to provide these types of gains for our investors here. Currently, to identify some levels of resistance that I would pay attention to would most likely be right here at the 148, which you can see we're trading below. And what I would look for, these are previous levels that I identified. I would look for it to hopefully find some support about around the 125. If it breaks below that, we're breaking below the 115, because the momentum is like a falling knife, as they call it. And we're probably potentially looking to pull back heavy on this. Let me pull in my indicators before I say anything like that. Yeah, just as you can see, the EMAs are turning red, and anytime we see the EMA turn red, we see the pullback there. As you can see, sell volume down here is picking up. These are things I want you to pay attention to when you're looking at my charts. That's what they're there to identify. And just as I thought, the 130 Actually, the 130 is the strongest levels on the volume profile, so I expect to find some strong support there before we go any lower to the 115. So I'll retract or retrace what I said earlier about the 115 level. Let's see if we find support at the 130 5 levels and continue to move higher back up. Just to look back previous levels, I mean, the company's traded much higher than these levels before. Took a hit back in March just like everybody else did. I'm going the wrong direction. Give me a second. Yeah, so beyond that, we're looking at the 296 price levels. If this stock is able to find that support above the 178 and continue moving higher. If it does not, then, you know, we're going to sit here for a while or consolidate all the way back to when we were initially alerted on the stock. So that's something to keep an eye on moving forward. Our next stock is AVO. I don't think this is one of our 100% gainers, but I think it's performed very well. It's one of our older trade alerts. AVO we released on December 21st as well. The stock was sitting at 543, currently sitting at 844, which has provided us with 55% gains on the trade. And let's see where we peaked out at. As you can see, we actually peaked out here above right at 1071. So actually, I think this came close to becoming a 100% gainer. We topped out at 97%. Oh wait, no. I'm at the wrong time frame. Excuse me for my mistakes. Anyways, let's go back. Let me just reset the chart. Okay, so not far off of that. Of course, that is a key level that we need to break in order to, you know, truly become a growth stock from its current position, in my opinion. So ultimately, since our trade alert, it provided a 79% profits overall. Still not bad. Almost 4 times our top line targets and the trades that we provide. Pretty happy with it overall. I can't complain with the position that it provided us with. As you can see, we are looking to find support around the 775 if it does not hold strong above the $8 price range. So keep an eye on it moving forward and how it performs. I'm going to turn this green so I can see how it relates with previous historical price action from before. So as you can see, we found strong resistance there before in previous trading sessions and breakouts. That 1071 level is key here, as we have tried to retest it multiple times over the past few years, all the way back to 2019. So watch that moving forward. Of course, that 970 level that I spoke about is also a key level that we need to break above in order to even retest those 1071s, and then potentially break above there and find some support to continue trading at least to the $14 price range. If we are able to confirm that trade and we go to $14, we're looking at 158% gains on our initial trade alert from releasing the stock then when we did. So next is HBAN. Let's see, HBAN. HBAN is currently up 21% from our initial trade alert. Let's see, 1241. And 1505, of course, gave us this 21% return on the trade, but I think it actually performed much higher than that. No, it did not. We actually are peaking out around these price ranges that we're currently at. So the stock is at a key moment, in my opinion. As you can see, all the way back to here, at least those levels of 1498 were strong levels of resistance. The stock's currently trading at that, but it's also, I'd like to identify a second peak if we want to really go into detail. Is right above this, right above $15. So if we trade above $15 and find support, then we're moving higher to the upside to continue making some gains here. If we see how that relates to historical data, the next levels that we would look at for this would actually be at the 1660 levels of resistance. So if we hit 1660 on the trade, then we're looking at a potential 34% profit gain. If it doesn't find the support here, I'm probably going to go ahead and close this trade because It I just, I want to secure what we're providing as far as profits as much as possible. And it seems like this stock has issues staying above that 14.98, so we could actually see it come back to the 13.23. And I don't want to lose any profits for anybody that actually has a position in the trade. Okay. All right. Next one, of course, is going to be Sandal, SNDL. We have been covering this stock a lot, and I've been pretty happy with this performance. We're still up, even with it being down as heavy as it's been here over the past few days and weeks. We're still up 259% on the trade. And we initially alerted on the stock back in December 22nd when it was at 52 cents. You may have heard that from me before. Currently had some stock offering, still being shorted apparently. Broke down below trend line currently. But at its peak, it actually provided us, I want to say, like 832%. I can do the math real quick at 486. Of course, retail investor, 835% on this trade alone. Of course, retail investors came into this and that caused that spike. We initially alerted on it because the company had simply stated that they were going debt-free. They were a debt-free company now moving forward, and we had faith in its moving higher. There was nothing else leading into why we basically alerted on this stock versus outside of its initial trend analysis that we conducted, and the fact that it was now a debt-free company. That means a lot in business to become a debt-free company. Any capital that you do capture in doing business is all free cash to continue growing the company. I think the company actually just announced a $22 million investment in a edibles company to expand its service line. So, all good things, all good faith in this company, regardless of, I know a lot of people probably got into the trade late, and they weren't able to see the performance that we saw from it. But I still, to this day, I'm placing calls on SNDL because I still have faith in it as a business. I see it retracing at least to the 240, but I have high hopes that we could see $3 again, 313, as you can see right where my mouse is placed now. And based on where it's currently at, if it hits 313, let me account for where the position is now. You can still see a 72% profit on the trade. If we, as far as our investors, were to wait till 313, we would have got 502%. I initially alerted on the stock when it hit 486 to go ahead and capture gains because I saw that the retail investors that came into this stock, and it was going to cause issues like this where a lot of people are starting to hold bags on the stock. And I'm sorry that you weren't here with us to catch it when we initially did, or you got caught up in all the fiasco that was going on with it. But moving forward, though, not currently closing the stock, only if you held a position in it from when we initially alerted on the stock back when it was at 52 cents. Otherwise, you're just getting a drink at the party versus buying the bar, which is what we're able to conduct with this trade. So we're actually moving forward and looking for other opportunities at the same time. Moving forward, though, we're going to look at AAL, American Airlines. We initially alerted on this stock for the reason of trend analysis, not because of what was going on in the economy. We're still up 10% on the initial trade alert when the stock was still sitting at 1634 around December 17th. Currently sitting at 1781. But it actually peaked out above that after breaking above this key level of resistance right here at the 1809. We actually peaked out at 1834. Overall, providing a 12% return on the trade. This was a longer term investment in catching it where it's at, and even if you bought in at those time frames, you're still up 10% on the trade. So, looking at it. Where are we at? It actually, I'm sorry. How did I completely skip over this? $30. I want to tell you now, I was completely aware that AAL hit $30. It provided us with the 86% return on our initial trade alert back from December 22nd. And that occurred on earnings on January 28th. So, pretty nice. I don't see it. I think this was once again a retail flood to cause price action like this. I typically blame it on retail flood into the markets, into the trades, because of whatever may be the case, whatever movement they're following. But as of right now, even though it bounced up and then consolidated pretty heavily, we still found support well above our 1634 levels, as you can see right here, and we're still up 10% on the trade. Longer term investment, I think it was a good position to get in at that point. I'm not suggesting getting into the trade right now. All right, next one, ADTX. As you can see, it looks like it performed very well for us at one point in time. It's currently up 112% from our initial trade alert on December 22nd, while it's sitting at 444. And just looking at the charts a minute ago, yeah, we bounced much higher than that. It's crazy how all of these are bouncing. Once stocks start to break out, you can expect them to bounce very heavy due to the new. I mean, like, you got to consider this with stocks now, is the fact that year to date there are 2 times the amount of trades. I think last year, same time this year, there was only about 7 billion trades being conducted. This being right before the pandemic hit. And now, at this point in time, I mean, we're only, 11 days from when the pandemic kind of hit the U.S. heavy for the first time, which was actually about 16 days before the market crashed last year. At this point, we're seeing $15 billion in trades being conducted on a daily average. Anyways, back to this particular stock, though. ADTX hit 670, provided us with 219% on the trade, ultimately. And then if you were to capture those gains and then look for a re-entry at that point, or if you held on to it, even if you missed that opportunity, still hit 558 on a continuation pattern, and that still provided us with 166% on the trade. Currently consolidating, don't blame it. Broke a key level of resistance here that should have become support, and as you can see, it attempted to, but lost that support, and now we're coming back down. We could see this come back down to the 393. We're actually going to put a trade alert if it does to go ahead and close the stock. Hopefully you were able to capture gains in the trade while we were updating on the stock throughout its trade process. Close ADTX. So, anyways, going down the list some more. LPCN. It seems like most of these trades were out of December. What I'll do is probably go through these trades once we get to the end of December, and then I'll start doing January like tomorrow or something, so that we don't spend too much time on this. I'm already at an hour just reviewing some of these, and I'm barely halfway down the list. As you can see, we have all these trades to review. Anyways, LPCN was at 142, hit 192, provided a 39% return on the trade. This was back in December. We're currently looking at January, where the stock actually hit 250 at its peak. You should have received an alert update on this stock. If you did not, let me know for whatever reason, but that ultimately provided us with a 67% return on the trade. Right now we're looking at a defined support right here at the 180 to continue moving higher again and retest those 250s, but it would have to break through the 227 first before it can. So watch for those levels moving forward. We're not currently closing the trade just yet, just to make sure that we don't break below those levels. All right. Next one is GoGo. I think GoGo did pretty well for us overall. This list is in order based on date release, not trade performance. GoGo was released on December 23rd, as you can see here. Initially alerted on this stock when it was at 978. It's currently sitting at 1580, and I think it's been much higher than that before. Yeah, we actually peaked out on this trade at 1737, which provided us with a 78% return on the trade. Great trade, almost 4 times X at its peak, still 3 times X of our top line target for our trade alerts here at Millennial Investments. So not mad at it. Pretty happy on the performance. Didn't expect it to actually do this well. because I think it broke down a little bit on us in the beginning, but found some strength and bounced back up. Um, anyways, that's what we're looking for. Key level of support right here around the 13. If we break below that, let me identify it here. 1344. Okay. Go ahead and pop my alert in real quick if you don't mind. I'm going to close this to lock in all profits made and then potentially add it to the watch list to look for a re-entry. All right, create. TEN. TEN, we initially alerted on back on December 23rd, and as you can see, this is definitely in the red, one of our red stocks. Not too far down though, so not too uncomfortable about the trade. I would like to review the chart to see what to expect from it moving forward. We could potentially be closing this real soon if it continues to trade in the pattern that it is. It actually did pretty well at one point in time. Our peak being 1291, which actually provided a 23% return on the trade. So, not currently happy with how it's performing. Might most definitely go ahead and close this stock out because of that. Let me do that to the side here so I don't disrupt what you guys are looking at. Potential closing. TN. Man, Tesla is eating me up today. I was hoping for a reversal on that thing, and it's just not doing it yet. So, gotta bite the bullet on that one. Anyways, moving forward to our trade alerts, ASRT was one of our top performers. Very happy with this trade alert. Released it back in December 23rd. Stock was at 38%. Currently at 121, still for a 218% return on the initial trade alert. You look at the chart here, we actually were much higher at the 145 price levels overall, providing a 282% return on the trade. We found some resistance here after consolidating from that 145, finding support here at the 108, and then bouncing back up to the 135 again. We're now back at that 108. I might close this alert if we go below it. So keep an eye out on that. If you did have a position based on our trade alerts, that's what we will be suggesting moving forward. If we break below that 108, then it's dead game for this stock. In my opinion, for now at least, I'm not saying it's going to last forever. Don't ever assume that I'm thinking or insinuating that when I say a stock's going to go down, I'm just saying it's going to pull back, and that's okay. Stocks go up, stocks go down. It's not anything to be highly concerned about. If it drops below 107 here, though, I will be closing this alert. If we find support, though, I will be updating you on that as well. Potential re-entry, if you haven't been in this trade, to go back up to the 135 levels, which could still provide you with near, just off the top of my head, about 25 to 30% on the trade. Not saying to buy right now because of our price position, initial price position being so heavy in the money ourselves. This signal right here. If you see this on stocks, I call it being almost late to the party. You have increased your risk getting in beyond this point. That's all I can say. We look for stocks that are down here and doing this. This is what we scan the market for. And we have a scanner that scans 2 other scanners before it even gets to us. And so that's how we're finding these opportunities, man. We're not. Oh my gosh, this stock's up today, so we're gonna pour money into it. Blah blah blah. Next one, I'm gonna skip PayPal because that's a weekly option trade. We're still testing our system there to make sure it works properly for us. To look here, let me pull this back out. I keep forgetting that you guys don't want to see all that indicator stuff. It's kind of hard to understand. With KMI though, let's pull up our information on it. Another trade at the end of December. Oh man, that looks weird. Anyways, alerted on the stock when it was at 1390, hit 1513 currently, up 9% only. But it actually peaked out at its peak. It was at 1613, so not much more in the trade, about 16%. If it breaks below that 1483, we are going to be closing the alert because it's not performing to our desired standard, although it did hit our minimum. So I'm not mad at it or upset when I say that it's not performing to our standard. I'm just stating that we've hit our 10% minimum. Take it and go home. Be happy with it. Close alert. Okay. And then moving forward, I think we're making our way out of December, and I think that's where I'm going to kind of wrap up today's live session of reviews, going over these trade alerts and just giving you an idea of how our trades performed from December until now, which we typically do a 20 to 30 day swing trade on all of our trade alerts, just so you're aware of that. Just like this one, AAOI was currently at 893 when we initially alerted on it. It hit 1279 as of today's trading session, providing that 43% return on the trade. At its peak, though, we actually made it up to 1392, which gave us around 56% on the trade. Pretty nice. In this situation, you could scalp like 25% and let the other 75% continue running. As far as leaving or keeping this trade open, as you can see, let's see here. Let's see what our momentum looks like. We're going strong to the upside, right? But some key levels we need to pass by is at 1630. As you can see, this was a previous level of resistance that it has tested multiple times, and we're retesting it currently now. We need to find support above the 1258, and the momentum shows that we can do that and begin trading into this price range. I'm not closing this because of the opportunity to potentially do that. That would actually give us 40% more on our initial trade if we're able to do that. If you don't have an entry into it, that's what I would look for, is making sure we're finding support above the 1258 and stay inside that 1258 for at least a day or two to show that the support is there, and we can continue trading higher to the upside to the 1630 and retesting those levels. I would like to look back a little bit and see how that correlates with previous price action. As you can see, once again, we tested that 1630 here. One level I would like to identify that was previously support that I would assume would become resistance like it did here is the 2376. If we break above 2376 long term, then we're looking at 166% return overall. But that's from our initial trade alert at 1483. The profit gains vary on your initial entry. If you were to enter right now, I can go ahead and give you a quick summary of that, but that'd still be a 94% return on the trade. I'm not saying to buy into it right now. I'm just saying we're not selling it. Make sure you understand the difference. Going into AAU, let's see if we start dipping into our, no, we're still in December here. We're actually down almost 5% on this stock, although it did perform for us. Not much, probably about 10%. At its peak. Oh, no. That's all the way back in August. I'm looking on the wrong chart. Let me bring it back. Let me bring it back. So the peak that we hit that I'm on seeing right now is 1943 on the trade. Currently trading below that. And as you can see, that was a level of resistance that we could not pass by. The fact that it broke down, and we're currently trading near or lower than where we started. I'm probably going to close this trade because it's not performing like I wish it had, and that's just not acceptable. So we are finding support around the 1767, but based on momentum, I can already see we're going to the downside potentially. We're not showing signs of a reversal here like we did here. So I expect this to actually go below. I will probably be closing this here shortly. Moving forward to our next trade is AUPH. AUPH provided us with overall 10%. We're on December 30th now, so should be coming to a close at the end of this video. I know that Julian, are you still here, Julian, and want to review OEG again? If so, please let me know in the comments, and I will continue doing that. Initially alerted on AUPH on December 30th when the stock was at 1413. Hit 1550 as far as today goes. Let me open it up here on the trade. Let's see here. Finding strong support at the 15. We actually hit $24 on this trade. So somewhere near 24, or 24. Somewhere near that $24 level. Let me identify it. 23.80 at its peak. Nice. Not mad at that. Provided 68% return. Of course, this looked like a lot of FOMO. Um, and a lot of people hopping into the trade pretty heavy. As you can see, volume spikes are crazy there. Still with you. Cool, Julian. Thank you for sticking around this long. I'm surprised you have, you know what I'm saying? But thank you. I appreciate that. We'll definitely, for that, we will look at OEG. Whoever else is watching, you want to look at a stock at the end of this. We should be done here shortly as we're coming to the end of December now with some of our trade alert updates and letting our members know where we're currently at and what we're looking at. AUPH, though, as far as future outlook on it, we're up 10%. We could let this ride and be comfortable with it. We can get out of it. I mean, it's not like it hasn't performed, but as you can see, this 1545 was actually a strong level of resistance before. It dipped below it a little bit, but found that support to bounce back up again and continue to the upside. Great on great signals to show that we can move forward. As you can see, though, we're actually trying to break below it. It's actually picking up to come back above it. So if I'm gonna set this a little bit lower to this level right down here, and that's gonna be my sell alert that I'm gonna set real quick to go ahead and get out of this trade. It's not performing. I mean, it did perform, but it's not currently performing in a fashion to hold long term based on its performance. Just so you understand why I'm considering that. I'm pretty sure I'm gonna get a flack as usual. I keep continuously getting flack for the information I'm trying to provide people, as if I am doing something wrong here. But anyways, ODT at 1963 on January 4th. We'll stop with this one, although it's a January trade. It is currently up 22%, sitting at the 23.69 levels. I actually believe I remember it performing better than that. Actually hitting 28.24. Yep, it did. I provided an alert update. Provided us with 44% on the trade. Initial trade alert back from January 4th. Didn't take long to perform that well. About our 30-day margin that we expected. Right at it almost. Currently consolidated strong back to the $23 levels before finding support right here. Boom. Perfect. I would have hoped for it to find support right here before retracing that far back. So now what occurred, since this previous level of resistance did not become a new level of support in reverse, it is still defined in my book as a level of resistance to watch out for if you have an entry, if you have position in this trade or looking to make an entry. As you can see, the stock is struggling to even find support above those levels. It's going to struggle to break through them moving forward, is my assumption. And why I base that. 23, 33 levels of support are now defined. As you can see, we're trading close to about 50% above that right now. Showing strong downward signals, so be careful that we don't hit this EMA up here on the lower time frames. Typically can define that by the 10-minute. So as you can see, we're looking like we're trying to round here, but sometimes you'll see it bounce up a little bit and then drop back down. So watch out. I'm going to set an alert myself here at the 23, 33 levels and close the alert because it will not perform beyond that. That's it for right now as far as the trades that we're going to be reviewing from end of November to end of January, or beginning of January, excuse me. We have Julian here who wanted to look at OEG. And I think, Julian, you were the one that brought up OEG in yesterday's coffee and stock session. I actually went into the market first thing that morning, bought an option on the contract, and made like $110 off of it just because of how well I like the setup. So I want to thank you for that. But as you can see, this trade opened up heavily to the downside in today's trading session because it's currently trading in this descending triangle, which is typically what you see occur with these types of trends, is a retest of these 947 levels and then to a bounce down. So I was actually fortunate enough to sell that contract that I bought based on you bringing this up yesterday right here at market open around 944. So thank you for that, bringing that up in our trade. It actually pointed out a trade to me that wasn't hitting our scanners, and I was able to pocket a little bit of money off of it. So thank you. As far as what I'm looking at now, it did exactly what ascending triangles do. It broke down, and then it broke down hard, and lost support on that trend line it's been trading on. So what you can typically see, what I have seen previously, is that the stock will start trading below that, even if it continues to increase from here. But just like you saw here too, I mean, I'd like to point this out, is that the stock broke down heavy and then bounced back up hard. So let's open it up a little bit and I can close my watch list now, so we can kind of look at that a little bit more. This breakdown, almost, let me clear the chart for us too. Almost identical. The only thing is this sell drop, the wick wasn't as long as this buy wick. So just watch out for it. I think it's going to be able to pop back above this 869 level and continue, trading higher until it compresses. Hopefully we can, what we needed to do is break above the 947 and find support there. Ultimately what you wanted to do here. Ultimately, your signal for a bullish sign to continue to the upside that we're looking at here. Finding support there would then allow you to retest those 1089 levels, which I believe we identified collectively as a group yesterday's trading session. Looking at the stock overall, this actually has not seen these levels in a long time, apparently. We identified 947 as a key level based on the weekly time chart. I remember that. And it's currently trading at that level now. And as you can see, it's breaking down. So don't let previous history deter you from the stock, but just be careful, because the difference between then and now is this big gap off of the EMA that it's trading off of. This could retrace heavy back to 710 with ease. At least 710. That's why I went ahead and got out of the trade myself. But other than that, glad I was able to give some updates on some of our trade alerts. If you have any questions, feel free to add them in the comments below. If you want to access our trade alerts, feel free to register your free membership at Millennial Investments. It's mymillennialinvestments.com. You can find the link in the description below. If you like what we're doing here at Millennial Investments, feel free to like the video. One thing that we are really asking a lot of our members that work with us on these videos, these live trade sessions, is share it. If you can only share it, I wouldn't even ask you for $1. Sharing it is more important to me than making any money off of it at this point, so that we can continue to build the community. It's a free-based community with premium type services. I want everybody to be aware of that. You don't have to pay anything just to be a part of the community and still receive some insight. Being a free member, you still receive the updates on the premium trade alerts that we only give to our premium members. So you can kind of still learn from the trades and why we were making the trades we're making. We go into as thorough detail as we can in analyzing our trades, considering all factors from fundamentals to technical analysis to social movements. Even though we don't trade based off social movements, you have to factor that in. And the way the market's moving as of right now in this day and age, it's a new game. So, what worked last year might not work this year, but we're always doing this and analyzing how our trades work out in order to optimize how it works for us. I've had a lot of people that have watched our videos and they went into the next market and said, the next market open and bought just because we talked about it. I don't want that to be that. If you request that we review a trade, it's because you wanted to look at it. I'm not telling you when to buy into it. I'm telling you key levels that you could potentially buy into it if it goes up or down to certain levels. How to confirm bullish signals, how to confirm bearish signals. I might not say those specific terms, but that's what I'm looking at, is the key levels. Key levels, whether they are levels of resistance or support, or just how the trade is performing. What I am going to start doing is using Fibonacci retracement analysis a little bit more. I see that a lot of people aren't aware of how to use that to analyze, entry points or selling points, or even support levels that we need to pay attention to as well, just in a different form of fashion. Excuse me. So thank you, Julian. I appreciate you. I'm glad that you're here with us. I like what we're doing here, and that's why I'm doing it. I enjoy it. It's intriguing, inspiring to help other people more than yourself has ultimately been a goal of my own. So the fact that I'm able to do it in this form and fashion where people can continue to make more profits, even if they're not aware of what the what trading consists of, what long-term investing consists of, we can kind of guide them a little bit to give them some assistance in becoming better investors and traders themselves and make better decisions instead of just going head first, knee deep into something and losing almost everything. So that's what we're doing this here for. Like I said, if you haven't already, please be sure to like, subscribe, share, and hit the notification bell so you can receive notifications about future live trading sessions such as this one. We always do coffee, and we will begin doing a coffee and stock session every Saturday for at least 1 hour, doing a weekly recap. We will start doing a 1 hour session on pre-market as much as we can to discuss potential trades that people want to review. This is all about the members, the investors, not about our trade alerts. As you can see, I did this separately for our trade alerts. But we will review trades that people want additional analysis on, how we would trade it, just suggestions and help and assistance in building that confidence in the trades that they are making or looking to make. That's what our coffee and sessions, pre-market sessions are about. They start at 7 a.m. Central Time. On Saturdays, we will probably do them about 10 to 11 o'clock Central Time. Just be sure to hit the notification bell so you can receive those notifications when we go live. Other than that, if you want to receive and test our trade alerts, you can always try by becoming a free member and receiving that free daily trade alert every day. Even if you want to try our premium alerts, you can try that for $10 for 7 days. If you can't make $10 over those 7 days, then I don't know what to tell you, but most of our trades perform very well. Although we do shoot for price targets of, time frames of 20 to 30 days. You still should be accumulating, value in your account. I do want to add, if you do become a member at Millennial Investments, do not dedicate more than 5% of your portfolio towards our trades. If you do that, and you're a free member at least, you at least will have 20 trades over 20 days. Okay, which is our time frame, and that allows for the stocks to perform. That allows for you to reallocate for stocks, reallocate funds from stocks. By the way, the link to your StockTwits form does not work on your website. Thank you. I will fix that here shortly after this video. But as I was saying, do not allocate more than 5% of your portfolio towards these trade alerts that we are providing. That allows you to have 20 trades over a course of 20 days. That allows you to reallocate any money out of non-performing stocks that hit our 5% suggested stop loss or our 10%, negative 10% sell threshold. You can reallocate that money to the next set of free stock alerts that we release beyond that 20-day time frame, or within it, even, if you get the picture of what I'm trying to paint here. But I just want to make sure people are aware of that, so that they're not exposing themselves to more risks than they can handle, and then being disappointed by the information that we're performing, all because they dumped all their money in one stock versus all the stocks we have in our portfolio, which you can see out of 84 stocks, we only have about 15 that are in the red, and only 3 of those are below our suggested sell threshold of negative 10%. And we can look now at the entire list and see that only, let's do it from this way down. Naked, man. Naked's killing me. I got to get out of it. Only one of them out of those, besides those 3, are below our suggested stop loss. Although some of these may have dipped below that suggested stop loss, they have bounced back, which is why we have not sold them, because they were showing momentum back to the upside. So you got to understand how we're looking at it. It's going to take some time. We don't expect everybody to understand it immediately out the top. But if you just trade with us and go through the process, you'll grow with us and understand how we're trading these and apply how this strategy works for you. Other than that, like I said, thank you for that update on the StockTwits forum thing. I didn't know that it didn't work. I'm normally on the back end of the website versus the front end. So I will be looking at that and getting that fixed. But other than that, I am building a mobile app too. I will be building a mobile app. I'm currently building it. I have one built that's already on Google Play, but it's not in the fashion that I like it, so I am rebuilding it based on the new developments we've made at Millennial Investments. So keep an eye out for that. It will be Google and iOS or Apple Store. It'll be on the Play Store and Apple Store, that is. But that'll allow you to register and sign into your account directly from your mobile app, get push notifications of our new stock alerts based on the type of membership you have, get all stock alert updates regardless of the membership you have, view some of our watch lists that we provide, view how the trades are currently performing based on your membership, access our daily discussions directly from your mobile device, access our due diligence directly from your mobile device, and if you're a premium member, you can access our trade tracker as well in order to track trades on the move, on the go, that you're performing outside of the trades that we're providing here at Millennial Investments. For now, though, that's it for today's sessions of trade updates from the end of November to the beginning of January. Tomorrow, I expect to do another session for all of January's trade alerts. I'm trying to dissect this as much as possible. And then from there, that would be Friday to do all of February's alerts. And then we can sum it up with a weekly performance review of how all the trade alerts from this week are currently performing. So anyways, thank you all for watching. Thank you for being here. Another 1 hour and 20 minutes with me again today. I appreciate everybody that did visit it, visit the video and view it. For those that miss it, you can check it out on our channel. You can search us on YouTube at millennialinvestments.com or just click subscribe and go look at our playlist. You'll see it there. If you have any questions and you missed this video, feel free to leave it in the comments below. If you don't have your membership already, the link to the membership is in the comments below. Feel free to join all of our platforms that we're on Facebook, Twitter, StockTwits, and our Discord community, Investors Talk, which is an educational Discord server to help you become a better investor and trader on your own while growing with us in the process. So that way, instead of receiving, you can contribute to the group and potential trades that we might not recognize or that nobody else is seeing. We all want to be stronger traders together, stronger investors together, because the stronger the team, the stronger we grow, the quicker we grow. And that's our process here at Millennial Investments is making everybody that we work with better than they were yesterday, as well as making them richer than they were yesterday. So like I said, any questions, hit the comments below. You want trade reviews done at any time, just comment on any of our videos or connect with us on any of our social media platforms. We'll add it to a watch list, go down that watch list during our coffee and stock session every morning pre-market. So if you want it done today, we'll review it tomorrow. If you actually want an active trade review, feel free to let me know. I think it's so safe to say that I would request you be a member before we do that, just so that my efforts are worthwhile. Other than that, man, thank you. I hope everybody's having a green day. I know the SPY is currently trying its hardest to trade back up to the 395. It's weighing down on the rest of the markets. EVs look like they're still taking a hit because Tesla's still down 775. Wheat stocks, I'm not sure where we're at with TL Ray, but I know that Sandal is currently dealing with some issues, staying above $2. And then let's see where we're currently at. I just looked at it. It's at 184, so it's not doing too bad. Anyways, those are my main two categories that I want to identify. I can't think of any other that are off the top of my head. I know oil is performing well because clean energy is having issues with these winter storms and not performing properly. Keep an eye on that. Financial sector is doing well based on some information I seen yesterday, but I haven't dug into it. Tech is currently down as the NASDAQ is down, I believe. Based on this right here, as you can see, the entire market is red US wise. International markets are red as well. The VIX is actually up 5%, which it was down earlier, negative 1.3%, so it's jumped 6%. So we're seeing volatility come to the market, which means a sell-off could possibly be looming. Not a large pullback, but potential. Crude's up, like I stated. Copper's down, which means that people aren't hedging on precious metals based on the market pullback. So that helps me assume that even though there might be a slight pullback, people aren't scared. at this point. Although the VIX is picking up, that is one thing to watch. Overall, the markets are showing me a negative score of 5, being down negative 1% overall. Overall being this entire table. But overall, we're actually up 0.32%. So hopefully we can turn green going into tomorrow, end of the week. I have some calls on the SPY myself with some calls on Tesla. I need Tesla to hit 850 by the end of the week if anybody wants to help me get it there. I'm just playing. Other than that, man, thank y'all for watching. I see somebody just joined us, but I'm sorry that you caught late to the party. You will be able to review this on our YouTube channel for anything we missed. I will be going through the list of videos and stocks and setting up a chapter-based setup where you can get straight to the video or part of the video of the stock you want to review. If you have any other questions about that, though, hit the comments below. And thank you all for joining us today. Y'all have a great day. Good luck trading. Peace.